Welcome back. We are now going to look at the profit and loss statement. Remember, in the overviews, you have financial reports. Inside financial reports, you have balance sheet, profit and loss, operation and cash flow. Today, we look at profit and loss. Profit and loss statement is a very important document that tells you for a given quarter how much profit you have made or loss you've made in that last period. You first notice that you can get the table that's below as an Excel file, which might be useful for you if you want to anticipate, do some forecasting for the upcoming period. Now, what is the profit and loss statement made up of? First of all, it is organized around the same regions as the balance sheet: the USA, Europe, Brazil, Liechtenstein, and the last column is the consolidation of all figures into Swiss francs. Then it is also organized around products, chips and PC. The first column is the chip, everything that has to do with your chip sales and production. It will be taken care of here, and then the PC. In this particular tutorial, I will first talk about the gross margin, so the first part of the document that talks about sales and cost of goods sold, gross margin, and total gross margin. Now, your sales are done in two categories: the sales of your standard goods and the sale of your deluxe goods, which in this case are called advanced. You can sell, as you remember, two categories, either standard or deluxe. Then each of these categories is broken down into several categories because you can sell in different ways. You can sell to consumers, you can sell to yourself from, let's say, the USA to Brazil operation, you can sell to another company, and you can sell your chips to the PC production. Now, each of these are considered selling. Yeah, and that could be also for PC, but of course the PC there is no component sale, it's only the first three categories. Then you have a line which is a very important line to understand called cost of goods sold. The margin comes from the turnover, the sale figure that you have had for your chip, and the cost that represent the acquisition of these chips. This can be either because you bought them or because you have produced them. And so your margin will be what you have pocketed, what you have received from your customers or will receive over time for this given sale. So it's the total value of the invoice, if you will, regardless how this is paid, and the total cost, actually the total variable cost of these goods. So in this case, you have received $40,000, something that cost you $24,000, and so you have a gross margin of 16,000. This particular line is represented by the variable cost of production or the direct cost of your acquisition from another vendor. When we go to advanced sale, this is the sale of deluxe goods, the higher category of the two that you sell. The same structure will be found. You have your sale figure, how much turnover you've made, minus what it cost you to make these goods that you have sold, and then you have a gross margin. The last line is the total gross margin, which is adding up the gross margin of the standard sales and the gross margin of the advanced or deluxe sales. Then, of course, you could have done some sales in other areas and in other products. you have done non-sales, no sales whatsoever in Liechtenstein because there is no business there. And then the consolidated is, again, like for the balance sheet, the total after applying the exchange rate for each of the figures concerned.